Okay, Mike here. This is a morning update, January the 30th at 9 a.m. in the morning. Facebook is gapping up 18.5%. It's all the talk on the television, and there's pure excitement. Some analysts have come out and upgraded the stock, and I've even gotten an email from someone asking me if they should buy it. Well, if you're interested in doing momentum trading and day trading and jumping in and out, yeah, trade it. But if you're an investor who wants to take a position in something and hold for a year or longer, then you're completely a lunatic if you buy this stock. And do not buy it. Why? Well, let me tell you. I don't care that it beat purposely low earnings estimates. I don't give a shit, and I don't care that it's gapping up 18%. It has a PE of 136. That means it's like 10 times overvalued. This stock should be worth $10 a share. If it was not a stock, it was just a company down the road from you, and you were going to buy it in the real world, you'd pay a fraction of this, of what it's trading at. It's an overvalued stock. You don't make money as an investor by buying overvalued stocks. And there's even more reasons to worry about the long-term viability of Facebook as a company and website, which all it is a website. I don't know if you've heard about it, but a study has come out by Princeton saying that Facebook, they say, will lose 80% of its users by 2017. I'm saying it can, but click below for a link to this article on this study, and you'll see the arguments for what's going on here. It's quite interesting, but to make a long story short, Facebook is dependent on growth, new users going into it. And if you're on Facebook, you go on there, you see people posting stuff. They post because they want the attention of people liking what they post or replying to it, the feeling of community. Well, if Facebook stops growing, then they're not going to get the feedback they want. People will lose interest in it and drop off of it or just get bored with it and do something else. It's a fad. And the internet's full of fads. MySpace was a fad. I've been online now for 20 years just about, and we've seen hundreds of fad companies come and go. TheGlobe.com, it's so many, and that's what's happened. What happened to them all is they grew exponentially and then collapsed when the growth stopped. So there's fewer and fewer younger people getting on Facebook. They're playing on Instagram and other fad things, which will have their day in the sun and pop too. So it's a big bubble, but bubbles fascinate people, and there's nothing more fascinating for the individual investor who doesn't know anything about investing in the stock market than trying to buy Facebook. Why? Because they're on Facebook, and they crave the attention they get on it, and they hear about it on TV, and today Facebook stock is gapping up 18%. And there's nothing that's more likely to drive individual investor thinking about a stock, watching a stock, than a giant gap up to provoke them into buying. So that's what we're seeing today. We're seeing the little man jump in excitement. So let's talk about the stock itself. All right, I was saying you cannot buy it if you are trying to invest. If you want to invest, you look for markets that are priced low, and you look for stocks that are priced low, and if you can line that up with a chart of something that's beginning a new bull market, you can make a killing. Where's that going on? Outside the United States. It's going on in a few select world markets, but it's also going on in the gold and commodity stocks, which are lining up. If you truly want to invest, that's what you look at. You do not look at Facebook. That said, I know so many people watching this video cannot help themselves. They feel compelled to buy this stock for whatever reason. Well, let me explain what's going on so you can understand how to treat your position if you do buy one or you already own one. The United States stock market has been going up now since 2009. It's overvalued, but it's been going up anyway. It's been overvalued now for a year, but it went up in 2013. And stocks like Facebook really went up. It's overvalued now. It was overvalued 6 months ago. In fact, it was overvalued all of 2013. It's really worth like 10 or 15 bucks a share. But it doesn't matter. That made it go up, and up. It doesn't matter if you want to invest, but if you want to play the momentum, it obviously doesn't matter. And that's what's going on. You've got people jumping in Facebook who don't look at fundamentals when they buy stocks. They just buy. And that's why for the past couple months now, I have said that if you were to trade most stocks in the United States that have these high valuations, earnings no longer matter, fundamentals no longer matter. All that matters is pure momentum. The danger in that is when momentum fades, when momentum reverses, you will have these stocks get smashed. And we saw a glimpse of that last week when the Dow fell like almost 4% off of its high. And more brutal times like that are coming ahead of us for these individual stocks. And you don't know which one it's going to be. But if you want to play that game, play it. Personally, I'd rather not play that game. I'd rather buy something with the knowledge that I've gotten in at a good price, and I don't have to worry about momentum players and bubbles popping, that I can get in and know I've got a good chance to be at the start of something and not worry whether I'm at the end of it or not. So if you're interested in that kind of stuff, keep paying attention to what I've got to say, because those investments I'm going to take this year. I already in a lot of them, but I'm going to buy more of them. And I can help you out there. As far as trading Facebook, I don't have any trading strategies for Facebook. If you want to invest in Facebook, the answer is no. If you want to trade it, go to Yahoo Finance, jump in the message board, and ask the people there how to do it. They're just as knowledgeable as anyone else playing Facebook stock. So talk to those people. Maybe they'll have some ideas. Because those are the kind of people running Facebook stock now.